panic that gripped the markets on Monday has been replaced by confusion and uncertainty today. Oil prices failed to avoid strong fluctuations. Nevertheless, the quotes managed to confidently move up. Obviously, the main reason remains the war in Ukraine and numerous sanctions that are turning one of the largest oil exporters into a global economic pariah. The more Western and Asian countries are joining the US in imposing sanctions, the higher the concerns over the future energy shortages are. Since there are no promising results of the negotiation process yet, market participants continue to see oil as an asset that is likely to gain value. Despite price swings, the most likely scenario for the near future suggests a sideways movement around the level of $100 per barrel. Alternatively, oil prices may advance. Still, it makes little sense to use technical analysis tools as markets are still being driven by panic and brave speculators. On Monday, Brent crude oil futures saw rather high volatility. Thus, the benchmark fell sharply to $90 from $100 per barrel, but then won back its losses. The ascending cycle is still relevant in the market. Today, after the price overcomes the recent price gap and approaches the level of $102 per barrel, it may well continue its moderate upward movement. As for the foreign exchange market, the ruble continues to fluctuate. Yesterday, in early trade, the ruble plummeted to a record low. However, later the currency managed to gain value and fix below 100 rubles per dollar, thanks to the measures taken by the Bank of Russia and the Russian Finance Ministry to stabilize the exchange rate. Nevertheless, market sentiment on the Russian ruble is still bearish. The regulators' actions have been effective but temporary. Given that the ruble is trading under strong pressure, it has no chance of extending gains. In the best-case scenario, the Russian currency will remain around the current values for some time, but the likelihood of a new downward wave is extremely high. Since the market continues to demonstrate its direct dependence on geopolitical news, there is no point in making technical forecasts. In the near term, the ruble versus the dollar pair is likely to continue its swings in the area of 93-99 rubles per dollar. Alternatively, the pair may stagnate at current values. Much depends on new statements, sanctions, and the regulator's steps. The only relevant tip is to follow the news feed. Gold stands out against this background. The yellow metal showed some sort of stagnation rather than stable growth. This can be attributed to the sanctions imposed by a number of states against the Bank of Russia. The largest player that was supposed to stoke demand for gold was driven out of the market. Thus, investors seem to be confused. On the one hand, high global risks contribute to growing interest in safe haven assets, including gold. But on the other hand, an uptick in appetite for the metal and its subsequent rise in value will lead to a return of the Bank of Russia to the market. This, in turn, will result in a massive sell-off of the asset at higher prices. In this case, the market will see a collapse and huge losses. Therefore, gold prices are expected to stand still amid this uncertainty. After a steep dive, gold futures resumed their upward cycle. However, this movement can hardly be called strong. Apparently, the asset will form a price corridor in the near future. In this case, the levels of $1,880 and $1,920 per ounce will act as the lower and upper boundaries of the channel, respectively. At the same time, the trend is still upward, which means that gold prices still have a chance of rising. Well, that's it. Please watch our new videos and stay up to date with the latest news. See you back soon.